Hey everybody. Hopefully you guys can hear me okay. I had some issues with like the Bluetooth on my computer for some reason. It's not working the way it's supposed to. Perfect. Okay, sorry about that. Yeah, my Bluetooth mouse hasn't been working and I thought it was just a mouse problem, but I think like my Bluetooth drivers or something on my computer just jacked up. So, anyway, that's a problem that I'll have to deal with later, but I appreciate you guys bearing with me. We're going to get started here in just a couple minutes. Just going to give everybody the chance to hop on in here. I know Shark and I both said he's coming. He unfortunately is delayed on the flight. He's still currently on his plane, so we'll see if he makes it off in time for the class. But if not, it will be unfortunate, but life will go on. How's everybody doing tonight? Hopefully having a decent day so far. I will say it's been definitely, and I know I mentioned this in my tab, but definitely one of the most challenging markets in a little while. Yeah, it's not the time and place to be super aggressive. The thing that stands out to me the most, it continues to be market leaders. I continue to harp on that same idea in my tab. So if you are going to be trading, at least for me, this is my watch list. I'm looking for market leaders. AALI's had a great day today. We'll see if it sticks. Fastly is up basically 100% in a month or two. I mean, this is probably the best stock in the market right now. Let's see, what else do we have? Light didn't do much today. PL didn't do much today. VRT didn't do much. SanDisk didn't do much. Circle looks really nice. Maybe starting to form some kind of flag here, something like that, right above these prior lows. Gotta like that. Bloom Energy broke down today. No fun. Sienna holding up at the highs. Nebius doing nothing. So anyway, I mean, for me at least, and this is certainly going to be a topic that we cover throughout tonight. But yeah, I mean, in terms of planning trades, I'm severely limiting the names that I'm looking into, and even getting ready for a bear bias if it needs to happen. It's hard to be super bearish just based on where we're at and with the significant level of elevated volatility, but it's also hard to be incredibly bullish either. So anyway, that's a little bit about what I'm doing. Just a quick preface into the night. We'll give it like one more minute. I'll send out one more message letting everybody know we're getting started, and we will get right into the class for tonight. Starting now. Perfect. Good evening here to trade. Hope you're doing well too, Pedrito. Good to see you. Yeah, definitely volatile times. Nothing fancy. There's no other way around that. All right. Well, we have a good chunk of stuff to cover tonight. So I do kind of want to get right into it. Just as a quick kind of introduction slash warning to everybody. I know Shark advertised his presence. I also did as well. He is currently stuck on a plane right now. So we're hoping he's able to get off safe and get home safe, but we can't rush the guy, obviously. So anyway, hopefully he'll make an appearance towards the latter half of the class if he's able to make it home in time. But if not, maybe we end up missing him, and that's okay. So with that, let's get started. And yeah, we'll see if he makes it here at some point later. So like we mentioned in the alert, hopefully a lot of you are aware, but this is going to be the beginner's course series, and we're on lecture 10 now. So we're really rounding the bases on this one. If you haven't been to one of these beginner course series classes before, I'm a little biased, but I certainly highly recommend that you go check out all of our previous recordings of this round of the beginner's course series. We put a lot of effort into making these quality, making these applicable, and really making them unique for our community and the individuals that we have in here. So hopefully you guys feel the same way and feel like it's reasonably tailored to at least the interests and needs of a beginner in the stock market, and hopefully some of our intermediate and advanced folks are also getting some out of it too. Just as a quick reminder, we're on lecture 10 here. We got two more after this. 11 and 12 are going to be really, really big ones. I'm hoping we can get a big group of people in for both of those. Some of our swing traders here to talk about our next class. And then trading psychology, arguably the most important lecture in this entire series. So I did do my best to save the best and most important lectures for last. We've really hopefully felt like, we have built a good foundation in terms of all the more foundational knowledge like candlestick, support and resistance, all that good stuff. And at this point, hopefully you guys have a good idea and have been practicing those a little bit, doing the homework here and there. And now we're ready to start putting all these concepts together in these last few classes. So this is going to be, a rather important trio of classes. And as a reminder of our goals, again, hopefully all of you are aware of them at this point. But obviously the goal is to develop successful traders. That's the goal of Only Options and specifically these course series as well. And the most important part about this goal is we don't only want to develop successful traders, but we want to develop successful traders who execute and act on the highest probability trades. We're really looking for quality coming out of this lecture. You could certainly be successful in the short term, just throwing, shit at the wall and seeing what sticks. But really the goal here is to develop individuals who are going to be disciplined, who are going to look for high quality opportunities, who are going to execute them consistently over time. And really, the true goal is to get you guys to a point where, you don't even really need to be in this group anymore. And, maybe you want to stick around for fun or whatever. But, the goal is to teach you what you need to know, give you the practice, give you the mentorship, and honestly, send you on your way. That's always been the goal. And, it's counterintuitive maybe from a business mindset, but really, this group exists to teach and develop new traders. So the second goal is to teach you all how to apply the techniques discussed in this course series. So it's one thing to talk about these topics in lecture, but it's a totally separate thing to actually practice them and implement them. And that's why we've implemented the homeworks for this time around. I will say that people participating in the homeworks has certainly dwindled from the first few classes, but hopefully some of you guys will feel inspired to do some of the homework at the end of this class. It's not going to take too much effort. Every single homework's really 30 minutes, but it just gets you into the motion and gets you to start practicing some of these concepts, which, you could sit here for the hour and that's great, but, the practice is the most important piece. So that kind of covers some of the basics here. And now let's get into the content for tonight. The last thing that I'll say is, as always, if you guys have any questions, comments, go ahead and put them in the chat. Also, if you would like to unmute, you guys are more than welcome to do so. You can unmute, just interrupt me, whatever you need, whatever works best for you to get your questions across. So with that, my first question is why use a trading plan? And this is a question for the whole group. Some of you may or may not be familiar with what a trading plan is. Some of you may or may not already be using trading plans in your day to day. But I'm going to ask the question anyway. Why would you guys think it's important to use a trading plan if you guys had to guess? Feel free to throw your answers in the chat. You can unmute. What do you guys think? Stay profitable. Yeah, I like that. Not trade on tilt. Yep. 2 good points from Nothing Fancy. Yeah, what else? Give targets, mark levels. Yep, I agree. Maybe a couple more ideas. What do you guys think? Why should we be using a trading plan? Yeah, helps identify edge. Sure, I agree with that. Not chase. Yeah, those are all really great points, right? I think one of the most important parts of understanding why you use a trading plan. I'd like to give an analogy. I give a lot of analogies in class. If you think about any skilled profession, right? Which trading is a skilled profession. It's not something that you can just pick up and do immediately. I'm sure a lot of you guys have realized that. With any skilled profession, right? When you're entering, the industry, when you're performing day-to-day work, if you're, looking to achieve quality, if you're looking to achieve results, you're going into each task, each thing that you do with some kind of plan, right? And it doesn't matter how, maybe detailed or high level it might be, but regardless, if I'm an engineer, which for those of you who do or don't know, I am actually in my day-to-day life, and I'm working on a mission critical task, I'm not just going to wing it, right? If I know I need to be successful, the outcome needs to be positive. Whatever I do, whatever I design has to work. I'm not just going to wing it, right? You could think about a moon landing or people designing vehicles, right? The people who are executing those things weren't just messing around and saying, all right, well, hopefully this works. We'll try this today. We'll try this today. Certainly there's a little bit of room for that. However, in general, right, there's always some sort of structure behind these sort of skilled and challenging efforts. And I know we're not, landing on the moon here. Trading's really not that complicated, but hopefully it does convey the gravity of what we're doing when we're trading, right? We're putting real money at risk. And this is money that we worked to earn, right? Most of us didn't just come up on this amount of money that we're trading with, right? We worked to earn it and we want to protect it and we want to grow it, right? So fundamentally, when you go into the day without a trading plan, number one, you don't have any direction, right? So you're really just kind of searching for anything that comes your way. And there's really no structure, right? There's no way for you to know what you should be doing, what you shouldn't be doing. And when you go into a day without a plan, it's also will become very clear that the market's going to be able to surprise you very easily, right? If you go into the day kind of aimless, it's going to be real easy for the market to catch you by surprise because you've done no review, you've prepared nothing, and you're just kind of throwing things around. Some of the most important, lessons I think as to why you should use a trading plan is it actually gives you something that you can test and something that you can study from, right? If you're just going into trading willy-nilly and, one day you decide you want to get calls and the next day you decide you want to get puts, there's no real structure. There's no strategy that you can look back on over the weekend or on nights and back test that and study that and see how that's performed, right? But when you're going into the day with a structured trading plan, you can actually find opportunities for yourself to improve, right? If I have a trading plan going into the day, and I know in general the structure of my trading plan is maybe for every dollar I risk, I'm looking to gain two, right? That might be a very simple high-level trading plan. And I might identify over 10, 20, 30 trades that risk to reward ratio might not be optimal for the way that I'm trying to trade. Maybe something a bit more optimal is something like 3-to-1 risk to reward or 0.5 risk to reward, or whatever it ends up being. But long story short, having a trading plan going into any given day really gives you the structure that you need so that by the time the market actually opens, you're really not making any decisions. All you have to do is just wait, right? If you have a trade plan, you come into the day and you say, this is where I'm going to buy this stock, or this is where I'm going to sell this stock. And you know that coming into the day, there's really no emotions at all. And all you have to do is show up and execute that plan and move on. And if Sharp joins later, he's given me some of the most fascinating and some of the best mentorship I've received on this topic ever. And one of my problems was I would come into the day with the plan, but I wouldn't execute it for some reason, right? I was just too scared. I wasn't confident. And the best, three-liner that he ever gave me is swing the bat, right? You spend the time making the plan, you spend the time and the effort getting it right and tuning it into the way that you want to trade and the name that you want to execute. So it's time for just swing the bat, right? You got all the way up to the plate, you stretched out, you got everything ready to go, you trained the day before. Swing the bat after you've done all the work, right? It's so easy, for some people like me, it wasn't as easy to get over that hurdle. But when you do all the work outside the market, it makes things so much easier, so much less stressful, right? Like, for example, you look at a stock and in some cases, you don't even really need to watch the chart throughout the day. You can just set a buy order somewhere and, if it comes, great. If it doesn't, great. You don't really care, right? You just know that's your plan. You want to buy here, you want to sell here. And if it happens, great. If it doesn't, great. You don't really care, right? So anyway, those are some of the benefits of using a trade plan. Obviously we're going to get into more of those as we continue throughout the lecture, but hopefully that introduces a little bit about, why a trading plan is so important, so lucrative. Any successful trader isn't going to the day willy-nilly. They're going into the day with some kind of trimmed down watch list. They know what they want to trade. They know how they want to trade it. So anyway, I think we hammered that home. So this is another one of my favorite graphics. I have a couple of these in the slideshows, and this is one of my favorites. This helps us kind of make it real clear what the most important pieces are in trading. And I love this graphic for a couple of reasons. It really helps convey the significance of a trading plan compared to actually being able to be in the right mental headspace, right? So up top at the top of the pyramid, maybe what's least important relatively, but still important, is understanding, where you want to enter, where you want to exit in the name you want to trade, right? That's something that's super easy to do. You could put together a trade plan like that, that gives you an entry, that gives you an exit with some stock in 5 minutes, right? 2 minutes, maybe 1 minute. You could find a stock to trade so quick, probably. Might not be quality, but you can find something real quick, right? And if we move down to the next piece of the pyramid here, this is where we actually start to get into some discipline, right? This is where we start to identify maybe how we can actually execute this trade, right? How are we going to use the capital that we have in our portfolio? How much money are we going to allocate to this trade? when are we going to stop out of this trade, right? What are we going to do when we stop out? Are we going to sell half? Are we going to sell partials? How is that going to look? And then also, this is where we start to think a little bit higher level, right? We're not just picking some random stock, but now we're starting to look for maybe specific stocks in specific markets, right? So, for example, kind of like we talk about all the time, maybe we look for relative strength in an individual name that's in a strong sector, right? Oil and gas is super strong right now. So maybe we're looking for strong or undervalued oil and gas stocks, for example. And then at the bottom, right, once we have all that in place, we've selected our stock, we planned our entry, we planned our stop, we know how much money that we're going to use in our portfolio. The hardest and most important piece is being able to manage the way that we innately are as humans to actually execute that plan appropriately, right? So getting that plan in place, getting trade-in rules in place is one piece of the puzzle, but all of that means nothing if we have maybe too much of an ego, are too impatient, are too emotional to actually follow those rules, to be disciplined, and to execute those trades the way that we plan. So this patience and emotions piece isn't something that we're going to cover in too much depth tonight. That's going to be the theme of our trading psychology lecture, because truly you could probably have a whole course series on trading psychology. We're only giving it one lecture, but I mean it's such a complex topic. But that's kind of the idea of what goes into a good trade, right? We're coming into it with a plan. We're coming into it with a really quality name. We're looking for a high quality stock. We're not just trading crap. And then obviously we have our head in the right space, right? We're ready to execute our plan for the day. We know exactly what we need to do, when we need to do it, and we're ready to be disciplined. We're ready to follow our rules. The most interesting thing about trading is that you really are your biggest enemy, your boss, your supervisor, and the doer all at the same time, right? You don't have somebody who's watching you all the time or looking over your shoulder and telling you if something's a good idea or not, right? It's all up to you to execute your plan, to follow your rules. And if you don't do that, it's your fault, right? So you have to take accountability for that. And that's that trading psychology piece there at the bottom of the pyramid. So in summary, right, when you have a trading plan, very simply put, going into the day with a plan allows you as a human to minimize your emotions, and ideally it allows you to maximize your success as well, right? Because you can back test and realize what your thoughts were before a trade. You can document your emotions, your mental headspace before a trade. And then after the trade, you can recap that. You can say, okay, I didn't feel very good going into this trade and it didn't work out. And then maybe you could start to identify trends in your own trading, right? In this day and age, you could leave a trading journal and take your notes on it every single day and then toss it into some AI, and it'll probably help you determine those trends and patterns and behaviors that you need to work through. So anyway, that was a pretty long rant. We're going to get into some specific things that you guys need to do as part of your trading plan and as part of your trading rules. But what are your thoughts so far up to this point? Is this all making sense? Yeah, is any of this like brand new information for anybody? Has some of you guys been familiar with some of these topics? Sorry about that. I have truly no idea what happened. I joined the meeting on my phone earlier to get my mic to work, and I think I probably hung up the Zoom call somehow. So I don't know. I don't know how I did that, but my apologies. Yeah, I don't know what you guys heard and what you didn't, but yeah, what are you guys' thoughts up to this point? Any questions, comments, concerns? Is any of this information familiar to some people? Everything kind of making sense so far? Thanks for letting me know that you couldn't hear, Burrito. I appreciate that. hoping to at least hear how some of you are feeling in the chat rather than just assuming. But if you guys are feeling shy, we'll keep rolling regardless. Okay, Bill feels good. Thank you. Cool. All right, awesome. Thanks, guys. Cool. Let's keep rolling and let's talk about some tangible things that you can actually implement in your trading and you should actually implement in your trading. To start getting some rules for yourself, to start developing a plan for yourself. I'm going to start with position sizing and in general portfolio management. So let's talk a little bit about how position sizing and having some kind of stop, first of all, is going to help you manage your risk in your trading, right? So let's say, for example, this is all hypothetical. Let's say my position size is 10% of my portfolio with no stop loss. So what that means is if I have $5,000, every position I put in, I'll use approximately $500, right? About 10% of that portfolio. So if I lose 10 times in a row, right, 10 trades in a row, I've lost all my money, my portfolio goes to zero, right? And obviously this is a little bit of a, how do I want to say, like a sensationalized example, but hopefully this conveys the concept decently, right? And let's look at another example. Your position size is 10% of your portfolio, but now we're adding a 20% stop loss, right? So if you have $500 in a position, your stop loss kicks in at $400, right? So you're never going to lose any more than $100 on every trade, right? So I think it's pretty obvious, which system is going to be better, right? Obviously, having some kind of stop loss puts a cap to the amount of money that you can actually risk, right? So obviously that's going to be a little bit better. The important thing to note here is the idea of having a stop loss, right? Personally, I don't really ever recommend a fixed stop loss like this where you stop out at 20% on every trade because unfortunately the market doesn't care about our rules, right? The market doesn't care if we're going to stop out at 10% or 5% or 20%. It's not going to change the way it behaves because of that. So really our stop loss should depend on price action and we should fine tune our entry in order to have a stop loss that actually makes reasonable sense. And I'm going to talk through an example like that. And this is going to be kind of the first part of your trade plan is understanding your entry and understanding your stop. So let's look at something that I traded recently. We'll start with this AAOI. This is fine. So this AAOI stock is super, super volatile. It has an average daily range of 12.4%. Which just for reference, something like Apple is probably sitting, closer to 2%, right? So it's moving basically 5 times as much in a day as Apple. So it's super, super volatile. And as a result, right, we have to fine tune the way that we trade this stock. So for me, the way that I traded this one is I took an entry right around this $86 area, right? I took an entry right around here. And funny enough, I actually was able to get a pretty tight stop trading it in this way. Really, I would be looking for a daily close right below this 86, which for this specific example is actually pretty tight. But the important thing that I want to note is this stock on average will move 12% in a day. So in theory, right, if this stock drops 10%, that is a perfectly reasonable, expected, predictable move, right? It could move 10% either way tomorrow, and there will be nothing out of the ordinary about that. And I know that's crazy to think about, but every stock has its own personality, and that's just how the stock operates. So as a result, right, you need to keep that in mind when you're defining your stop loss. Like for me specifically, I'm mostly trading shares right now. So I like to have a stop loss that's significantly less than the average daily range of the stock. Usually, I never want to lose more than the average daily range on a given position. So my max possible loss on this position ever is 12%. I'm never going to lose more than 12% on this position, which is, not a bad size stop. But for me, the way that I want to operate is I want to actually operate with a stop that's even less than that average daily range. So once this position even starts to go against me, especially in a market like this, I move on, right? I move on to something that's maybe a bit higher quality. And I'm going to fine tune that for every single stock that I trade. So for example, another one that I was trading is PL, right? When I entered, it had an average daily range of 8%. So a stop loss of 4-ish% is super, super reasonable for this stock. A stop loss of 4% for AAOI is pretty tight because this thing can super easily move 4% in 5 minutes. I mean, it did that at open. It dropped probably 5%. Yeah, first candle, look at this. This is out of control, but this is just the nature of some of the stocks that I'm trading. First candle of the day, it dropped 6%. And that's normal, right? You can't let that freak you out or anything like that because that's just how the stock behaves. If Apple dropped 6% at open, that'd be a big deal. But in this case, it's not. So obviously, this example is very simplified, but the point that I want you all to get out of that is your stop loss should be defined uniquely based on the setup and based on the stock that you are trading. It shouldn't be just random. It shouldn't be just some fixed 20% stop on every single position. Generally, it's nice for a beginner to start with that. It's better than nothing. But unfortunately, the market doesn't care if you have a 10% or 5 or 10 or 30% stop. Yeah. Yeah, that's a great point, River. Yeah, thanks for sharing. Um, is there a general rule of thumb for scalps, day trades, and swings to stay profitable? The answer is no. There's no good rule of thumb for a stop loss. The main rule of thumb is to have one. That's the most important piece. Outside of that, the type of trades that you take can vastly vary, even within scalps and day trades. Usually if you're scalping, you're looking for a really high win rate and a tight stop. So like for example, on SPY, and if River wants to, you can speak to this. On SPY, most scalpers, most successful scalpers aren't going to let, an options trade go more than 10 or 20% against them. And they're looking for those quick, fast moves. They're scalping same days or weeklies. So they can very easily make 20, 30, 40% in 5 minutes. But that stop is going to be real tight as well, because especially in a market like this, things could go against you real quick. And you really don't want that to happen to you if you can afford it, because one big loss could kind of destroy some of those smaller gains or smaller trades that you might end up in. And the same thing goes for day trading and swing trading too, right? I mean, it totally depends on the nature of the stock that you're swing trading. Like how River mentions it so lovingly, some of the quote unquote shit stocks that I'm trading, right? These things are going to be pretty volatile. Like I mentioned, this thing is up 9% today. Let's see another good one. Fastly is up 15% today. This thing is moving on average 7% a day. So a larger move in these names might be completely within the cards. Fastly off this high, pulled back probably about 10, 15% pullback in 2 days, which ended up being completely fine. It was just a pullback in a bull trend. Same thing here, right? Another 10% pullback in 2 days. Nothing wrong with that. It's just the nature of the stock. So I think the biggest rule of thumb is fine tuning your stop based on number one, the nature of your position and the nature of the stock that you trade. So if you're trading same day SPY options, we can just look at one up. I'll just look up tomorrow expiration, SPY 2026 03 24 C. Let's look at like the 660 calls for tomorrow. This 660 call today looks like it dropped 70% in a day, right? So obviously this is going to be way more volatile. So you need to fine tune your stock or your stop to the way the instrument that you're trading is going to move. If you can't tolerate, a 10% swing, I mean, this thing swung 30% in the first 5 minutes. If you can't tolerate that, either you need a better entry or you shouldn't be trading this instrument, or you should size down, right? So anyway, I know that was a little bit of a ramble, but hopefully that illustrates some of the most important points of understanding your stop, right? I mean, based on the nature of the thing that you're trading, your stop should be tuned and dialed into that. And it's not like, it's ever going to be, I would say it should be on the same order of magnitude of, what the stock could do in a matter of minutes if you're scalping, hours if you're day trading, and days if you're day trading or swing trading. Hopefully that helps a little bit, but nothing fancy. I think I encourage you to probably get some examples and take your, I'll say, best guess on what you would stop out on in some trade plans and run them by some of the staff, or if you're following some of the analyst trades, make your own stop for the trade, run it by the analyst who alerted it and ask them, what do you think about this? Do you think this is reasonable? Do you think this stop makes sense? And just get some reps and get some practice in. That's really what's going to drive some of these points home, because a lot of the people who have been trading for years and years and years, this sort of, setting a stop loss and defining a stop loss just becomes automatic. And the only way they got there is just through practice. Right? It's not like it was instant for anybody with 20 years of experience. It takes time to develop these sorts of skills. Cool. Okay, the next part about a trading plan is profit targets. And last thing I'll say on stop losses, the reason I mentioned stop losses before profit targets very intentionally. Managing risk is always more important than looking out for your reward, right? As traders, our first and primary goal needs to protect our capital, right? Our main goal is to have our equity curve, continually on an uptrend. And in order to do that, we have to first be thinking about risk. What is the most money that we can lose on a trade? And connecting this back to your trading psychology lecture, which we'll talk about in 2 weeks, having a stop loss going into a trade almost helps you visualize, the amount of money that you could lose and almost accept that. Like when I go into a trade and I know, okay, I could lose 6%, and let's say my position size is $5,000, it's like, okay, I could lose, about, let's see, $250-ish on this, $300 on this. I can stomach that, right? I can stomach $300 and I'm ready for it. But if I go into a position, I throw 50K at it and I lose 10%, and I'm like, holy shit, there goes $5,000. It's like, man, like now all of a sudden you're starting to get in a real bad situation real quick. And that's what we need to avoid as traders. So that's why profit targets are going to be, I don't want to say second most important thing. Really, it's a third most important thing behind entries and stop losses. So another couple examples, right? Let's say, for example, a trader, has a profit target that's wherever they feel like, and they determine it after they enter a trade. So for example, when I enter a trade, I sell most of my position when I'm up 5% because I feel like it, right? So if my feelings are having incorrectly, I really don't know what went wrong. I can't really recap that. If we compare this type of trader, which I'm sure some of you in the room, operate in a similar manner, hopefully that didn't come off disrespectful. Truly, it didn't mean to be, but we're all learning. I get that. Compare that example or contrast that example to, maybe another trader who defines their profit targets before they enter the trade and they scale out of positions when it makes sense, right? So they're not just selling because they feel like it, or they're not just selling at 10% because, they're quote unquote happy with the profits. They can actually justify when it's time to sell, and they feel confident and comfortable knowing that they made a good decision. One of my favorite traders as well, Tilio, this guy probably sells every single position that he takes, quote unquote, early, right? If he's in a position, he might sell it for 50%, but it does 400%, right? And that's just the nature sometimes of the trades that he takes. And I know River does this all the time too. And I'm sure you guys see it all the time when he sells a position for 20, 30, 40%, like today, and his puts do, 500% probably. Sells early all the time. But the most fascinating part about that is, sure, you might see them joke a little bit like, oh, should have held, whatever. But in reality, they're actually happy because they executed their plan. They sold what they were supposed to. They executed the trade exactly like they thought they would. Maybe even got a little bit more than they thought they would, and they move on to the next one, right? And the most important thing to realize is that if you define a trade, you sell at your profit targets that you plan for, maybe leave a runner, maybe don't. Most important thing is your plan is successful. What you need to do now is understand what went well, maybe how you can improve for next time, take some notes on it, move on to the next trade, right? There are thousands and thousands and hundreds of thousands of super viable quality trades on a daily, weekly, and monthly basis in the stock market. And if you get hung up on one where, oh, I should have held so much longer, right? Well, you start getting in that mindset where, oh, all I want to do is hold more and hold more. All of a sudden, you hold more, you never sell, and all of a sudden, all that profit starts to disappear. So anyway, having that profit target defined in advance and selling at that profit target is a win in my book. Even for me, when I stop out at my stop loss, I consider that a win. I actually feel good when I do that, believe it or not. And one example of a trade that I recently stopped out on was PL. Again, one of River's favorite shit companies, horrible business in his mind, but that's fine. I entered it somewhere on this day, right around 26-ish, when it started to break this little range here. Took an entry on this stock. It got a really, really nice close. Closed at the highs, broke out of this range. The thing was looking great for the next day. And then the next day, it gapped right back into the range, broke under 26. I stopped out. We got an hourly close under 26. I stopped out. That position saw downside all the way, almost down another 10%, which who knows if I would have been able to stomach that loss. And then ultimately it came right back and I executed the trade again. Truthfully, I actually forgot it had earnings, and that's not something I'm super proud of, but I entered the trade and then realized it had earnings and I was like, oh God, that was not great. It worked out for me this time, but that's not something I'm incredibly proud of and really want to celebrate or encourage. But anyway, that happened. But long story short, right, I felt really good executing my plan in both cases, right? Felt a little less good about executing the plan into earnings, but that's a separate conversation. But I felt great, stopping out and getting out of that position and having my cash ready to allocate somewhere else. Another trade that didn't work out for me recently is CENX.
This one totally slapped me in the face. This was another one I entered somewhere around here, 54 area as it was breaking this tight range. Looked great again, right? Bull bar closing near its highs, fully cleared this prior range. Aluminum manufacturer, so likely, unfortunately, to benefit from some of the conflict going on overseas. You hate to think like that, but sometimes that's the reality of the market. Started to kind of fail around this breakout level. The day before I stopped out, it looked like it was going to hold that breakout. And then all of a sudden it gapped down 10%, way below my stop, and almost double. At the time, the average daily range of this guy was 7%. So a 10% gap down, 11% gap down was huge. I gave it like 5, 10, 15 minutes at open, sold it, moved on, right? And it bounced a couple times. It bounced decently, a couple times higher, and I could have gotten a better stop out. But I took it off my watch list, I sold it, and I moved on. And I was able to actually allocate that capital to a better position, right? I was able to be a little bit more nimble, move that capital somewhere else. And it worked out for me, right? So I took a larger loss than I wanted to, at least on a percentage basis, but hopefully nobody's going super heavy in this current market. But anyway, so those are just a couple examples. Hopefully it shows, but I feel proud having a plan, going into it and following it. Winning or losing a trade, it doesn't matter for me. I know the way my strategy works is successful in the longer term if I can actually follow it, which sometimes is a battle in itself. So as long as I can do that and execute it reliably, I don't have any reason to freak out, and the losses are just part of it. So anyway, obviously, the second trader is who you want to be, right? You want to come into a trade with your profit targets defined. You want to understand when you're going to sell, when you're going to buy, when you're going to stop out before you even get involved with a position. So let's move on to talking about sizing your positions, right? And this is one of your rules that you should probably have. What does a full position look like? What does a half position look like? And what does something that's maybe riskier or a lot of position look like? So this is just example sizing, right? Obviously, this is just a simple, Excel formula. But this hopefully gives you guys a little bit of a picture of what your positions look like. Some of the best and most brightest and most aggressive traders would tell you that you should never, ever, ever have a position that is greater than 25% of your portfolio. And that's like, the best, highest quality, highest conviction sort of position, and you scale into it. You don't buy it all in one day, right? So if you ever find yourself in a position where you're heavier on something than that, you're probably wrong. You are probably doing something very wrong, and you shouldn't be doing that. Regardless of that, right, these sort of metrics are something that you should absolutely know for the way that you want to trade, right? So if you're going to enter a full position, for example, that might be a position that's, you're very confident in, the market's strong, it's a high quality trade, and maybe you'll start off with a full position, right? A half position might be sometimes when, maybe the market's a little bit more challenging, but you still have a trade that you like a little bit and you want to throw some money at it. That might be a good example of a half position where you just want to size down a little bit and minimize your risk. This is a great market to be more excited about half positions, right? I mean, the market is so incredibly volatile. Literally anything could happen tomorrow, and the next day and the day after that, right? Literally nobody knows what the market's going to do tomorrow. So it's a great time to just size down or don't trade at all because it's such a headline-driven market. And then finally, for a risky or lotto position where maybe, you're in VC or trading, maybe some end-of-day SPY calls and it's probably not a good idea, but, maybe you have some profits that you want to try and, do something with. That's when you're going to go with a real small position, right? So that's going to be real small in your portfolio. So the risk on that is super small. The nature of a lotto position is that, typically the reward is high. So if you make that risk real small, you could actually make that rather nice for you. So the point of this slide isn't necessarily to tell you specifically how to size positions in your portfolio. The point is that you should understand and have a consistent set of rules to size your positions, right? This shouldn't be something that you do willy-nilly where you're like, okay, we're getting SPY calls today. I'm going to get $1,000 worth. And then the next day you're like, okay, now I want to get 2,000 because yesterday went so well. That's not how it works, right? The only time you should be changing your sizing is when you have proven consistency over months, or when the market's more challenging, or when you're in a drawdown, right? So if you're doing really well over a period of months, sure, your portfolio's, I'm sure, grown, maybe increase your position size a little bit. If you're doing really bad, like 5 to 10 losses in a row, you need to size down. If the market is very challenging, you need to size down, right? And literally every active manager, every professional money manager, professional trader would tell you the exact same thing. So if you're not doing that, you're doing yourself a very big disservice. So let's talk big idea, right? We've talked about a lot of different things. We've talked about entries, we've talked about exits, we talked a little bit about position sizing. But the thing that I want to talk about that'll really tie it all together is having some kind of set of rules or examples that really help tie this all together, right? How are you going to execute on every single trade? So let's say, for example, again, we have a $10,000 model portfolio. And let's say on average, we have a 60% win rate, which if you think about it, if you just flip the coin, you'd have a 50% win rate. So a 60% win rate, not all that much harder to achieve. We got Nando specifically, who's probably got a 100% win rate over the last 2 months, which is just crazy. But just goes to show it's possible, right? And let's say, your profit target is in general 20%, but, obviously that's not best practice. And your stop loss is, again, approximately 10%. So again, those are just fixed values, very simple just for the purposes of the example. On an example of 10 trades, where again, we're losing 4 out of 10 trades, and we have a consistent position size, we're still able to make $800, right? Even if we had a 50% win rate, we would still be profitable, right? We would still make, what is it, $500, I think. Yeah, if we were 50%, if we won 50% of the time, but we were risking $1 to make $2, we'd end up $500 in profit. We could have basically a 33% win rate and still be profitable, right? You could be horrible at trading. I shouldn't say horrible at trading. That's not the right way to go about it. But you could have a very little win rate. And just to be super clear, professional traders certainly have very little win rates in some cases, and they're super successful, and still at least break even or be profitable. So let's say, for example, you do the same thing, but the last trade you full port, right, and you lose everything. All of a sudden, all that profit goes away because you full ported the last one, and you got too cocky and too confident, right? So the most important thing is you have to have some kind of set of rules or some checklist that makes sure that you never put yourself in a position to lose all of the money that you've used all your discipline to gain. So that's why I just developed this trading execution checklist, right? This is something that you should follow every single time before you take a trade. And some of you may look at this and say, this is so stupid, right? Why would I do something like this? And I'm going to give you guys another analogy, which maybe some of you guys are real tired of it, but I'm not a pilot, just to say that out loud. But from what I do know about pilots and from the pilots that I do know, there's a checklist for everything, right? I'm sure everybody's flown a plane before. There's a checklist when you're getting ready to taxi. There's a checklist when you're getting ready to take off. There's a checklist when you have an engine failure. There's a checklist when you have an electrical failure. There's a checklist when you land. And some pilots have been doing that job for 20, 30, 40 years in some cases, and they still follow the checklist every single time. It's part of their procedures. No matter what, you follow the checklist. When my engine fails, first thing I do, aviate, then maybe grab the checklist and start running through it. That is what ensures that they do not miss a step, right? And again, maybe that example is silly to some of you, maybe it doesn't resonate, but these pilots, I'm sure many of us have flown on a plane, are just about the most professional sort of people that we interface with on a reasonably frequent basis. And these sort of checklists are the reasons why flying can be so safe, right, and so successful. And as a result, right, we carry that same sort of mindset in having a checklist over to trading with our trading execution checklist. And if we can't answer yes to all these questions, we should not be trading, right? So first question is, do I have a trade plan? Yes or no? If no, shouldn't be trading. Is my trade plan reasonable and complete? Do I have all my profit targets, stop loss, and entry? If I can answer yes, we move on to the next one. Is it high quality, right? Is this a trade that I would take and I know that it's good, right? Or am I just forcing this because, I want to rest or risk some money? Another one of the important ones that kind of checks on our mental state is, is there something going on in our personal life? Or am I tired? I didn't sleep well last night. Or am I just upset? If I can't answer yes to that question, probably shouldn't be trading. Last thing is, am I ready to follow my rules, right? Am I going to be disciplined today? Am I going to follow the rules that I set out for myself? If the answer is no, you shouldn't be trading, right? And the purpose of this checklist is to ensure that every single time we execute a trade, we make sure all our rules are followed, all of our prerequisites are met. So as a result, we should have the highest chance of success on every single trade. If you can't do that, unfortunately, and I know probably many of you might look at this and say, this is silly, why would I ever do something like this? I never guarantee anything and I never promise anything, but I would say, implementing a checklist like this and implementing a set of rules is just about the most productive thing that you could probably do as a trader and for your mental state, right? These are all things that you should be doing on every trade. Put the checklist on a sticky note on your monitor, put it on your phone home screen. I don't care, right? But I don't care what you do. Have these questions on a screenshot, on a photo, right? But you should be asking yourself these questions before every trade you take. And what this is going to do is prevent you from ever taking a trade that you shouldn't take, right? And if you're disciplined and if you can listen to yourself and behave the way you know you want to be successful in trading, this will change the game for you, for sure. Change the game, absolutely. So let's talk about some rules, right? I have this note where, I insert some rules here. So I have some example rules. I also have, I've written my whole strategy down and defined it. Let's see if I have it somewhere on my desktop still. I think I might have deleted that. I printed it out for somebody at some point. But anyway, I have a OneNote where I define my whole strategy, all my entry conditions, and this is just something example, right? So for example, if I was looking for a high quality setup, maybe I want to see, some kind of uptrend on the higher time frames. I want to see an uptrend on the lower time frames. I want to be near strong support. Maybe I have room, little resistance above. Anyway, this is just a checklist of some different technicals that maybe you might want to look for a given trade, right? And I guarantee you it will be very difficult for you to be successful if you can't recite to me what your strategy is and what the things that you look for in a trade are. I can almost guarantee you that every single analyst in this group, if I ask them, how do you trade and what are the things you look for? They could rattle off something like this, whether it's a list, an essay, a paragraph, whatever. They know what they're looking for and they look for the same thing every single time. And all of you need to get to the exact same place where you know what you're looking for, the way you want to trade, you have it written down, you have it documented, and you have that placed in your trading execution checklist. So every single time before you take a trade, you're reminded of exactly what you need to be doing. And if you're able to be just a little bit disciplined and spend a small amount of time to define this and follow it every single time, man, I mean, the way that your trading would change for the better, it's something that I can't even describe, honestly. You'll just have to see for yourself. But anyway, I think I've hammered that point home. We got a couple questions. Is it a thing to have a stop loss range that you're comfortable with and only take trades with risk to reward that supports that range? Absolutely not, fancy. For example, a name like let's see, AXTI, right? AXTI. This is a photonic stock. They're generally making like fiber optic related components. I would love to get an entry in this name. I would love to, but the problem is, the first thing is I like to see some kind of tighter consolidation, and it's not really giving me that ever, right? I'm never really getting any kind of tight consolidation, except for right around here, right? A little bit of tight consolidation, really down here at this 26 area. But outside of that, not really getting us any kind of tight consolidation that's conducive with what I'm looking for. And as a result, I can't really get involved in this. If I was going to enter, here, right, the closest level of support is, let's see, 20% away, right? I can never enter that. That's twice the average daily move of the stock. So in order for me to get to my stop, the stock would have to have two really nasty days. That's way too much risk for me. I can't afford that, right? And if I have a tighter stop, right? So if my stop is, maybe minus 5%, we're so far extended from a strong support that it doesn't even make sense. That's not even a logical stop loss. We're kind of getting ourselves into a position where it's like, yeah, this kind of makes sense as a stop, but it's just so far extended that it's not reasonable, right? Like, yes, it's less than half of the average daily range of the stock, sure. But this isn't a real strong support, right? This is something that maybe usually your stop if you're day trading, but anyway. Okay. And then you find yourself revenge trading almost instantly after taking a loss, even if it's small. Yeah, I mean, that doesn't surprise me. You're not the only one that's felt that way. But you're just gonna, unfortunately, nobody can stop you from doing that, right? Nobody can tell you what to do. Nobody can hold your hand or click the buttons for you. So you have to find it within you to get the discipline to stop doing that, right? If you know that you feel like you're in a spot where you might revenge trade, you need to stop. You need to find the discipline within you to put the phone down, close the trading brokerage away, put the computer away and move on, right? And if you really can't do that, right, look at your checklist, right? Develop a checklist and say, okay, I want a revenge trade. Maybe that's real, right? Okay, sure. Do I have a trade plan for my revenge trade? Okay, maybe, yeah. Is my trade plan reasonable? Yeah, maybe I make a reasonable revenge trade, right? Is it high quality or am I forcing it? Well, the answer will probably be no, right? It's not high quality. You are forcing it. And you're going to have to find the discipline to say no and follow your checklist, right? Because you have to trust your checklist. If you think about it again, I know this is a stretch maybe for some of you, but if you think about it, right, Shark just got off a plane and it looks like he's in here now. And I guarantee you, right, his pilot was following plenty of checklists. And if he deviated from them, probably could have killed Shark and a lot of other people, right? One wrong move has huge consequences. And it's the same in trading, right? You're not going to kill anybody, but you can lose a whole lot of money if you do something very dumb, right? And that's horrible, right? It could be horrible in some cases if you do something real dumb in trading. I mean, you could blow up hundreds of thousands of dollars in some cases, and that's your hard-earned money. And if you can't find the discipline within you, I hope at least you can find the discipline to not want to lose money. Because if you don't want to lose money, you want to make money. You'll obey this checklist like it's your Bible. We got Shark in here. I know it's late in the session, but I gotta hear his thoughts. He made it out here, so I don't know if you're available, Shark, if you're home.
Yeah, yeah. Sorry about that. I mean,
I
unforeseen
can't hear you for
circumstances.
some reason. I don't know why, if it's my fault.
Let me try 1 second.
Oh, I think I know why. Hang on. I think other people can probably hear you. I think it's just me. I
How about
will
now?
just forget about me. Feel free to talk about whatever you want. We've been covering trade plans. Yeah, we've talked about a lot. We've talked about, entries, stop losses, exit, position sizing. We've been talking about this checklist, trading rules. So anyway, cover whatever you feel is most important, and
Sure.
I'll find a way to be able to hear you because I want to hear too.
All right. Well, while he does that, sorry about that. As Tostie said, I was on a plane, and I'm sure you guys have heard about the TSA things or seen things, and yeah, we were stuck before we took off for a while, and obviously we taxied and stuck there as well. But luckily, I got home, and I mean, I walked in on great stuff from Toasty. I mean, like when it comes to for me, 'cause I was going through some of my DMs when I said I was going to be in the lecture, and a lot of you are just wondering like why playing a trade and why we stress it so much. But when it comes to swing trading, I say like the biggest difference between like traders who really make money and those who don't, like it's not intelligence or not even the strategy. It's just it really comes down to like the structure and whether or not like you have a plan before you enter that trade. I mean, a lot of people come into the market just trying to predict what's going to happen next. But the reality of it is, like, you don't get paid for being right. We get paid for executing well. And as Joe always says, this guy consistently says, like, we can try and predict what stock is going to do, and that's partially what we try and do here. But no one
Trying to
can predict that. You know. But yeah, execution. It really just comes from having a clear, defined plan. So before we enter any trade, we already know exactly what we're trading and why. Like, what's the setup? Is it like we have been doing demand zones, is it breakout, trend continuation? Like, if you can't explain your setup in one sentence, then you shouldn't be in the trade. Like, if I ask you why you're in this trade and you can't just break it down to me, then you have no business in that trade. Because if it's not clear before you enter, it's not going to be clear once the money's on the line. Like the money heightens everything. Emotions start to fly and it gets real. Like, I don't know if you guys ever tried paper trading, but it's a lot easier. People say, "Oh, I paper traded the strategy and I made money, so I'm ready to get after it." And like in my opinion, when it's not real money on the line, it's really easy to do the right things. Because you're not looking at a few hours or days of work that just went out of your pocket. But just a few things like trade planning matters because one, it removes the emotion, so decisions are made before the money's on the line. It creates consistency. It's the same setup, same rules, repeatable results. controls your risk. So that way we're gonna know our losses before we enter, and that one's huge to me because if I could look at it and tell myself like I'm okay no matter what happens in this trade, then I could follow my plan like foolproof. And yeah, it just builds that confidence so we're not second guessing mid trade. And I walked in and I know Toasty was talking about a checklist. I have one myself that back when I first started trading, I always went through it and it was setup, entry, invalidation, my target, risk management. And then the extra one sometimes I would have like trade management rules about am I going to move my stop to break even or fully play out depending on my position sizing. Because the biggest mistake, yeah, that check is beautiful, but yeah, the biggest mistake we make as traders, you can plan your entry and then that's it, which is great. I mean, a lot of what I talk about and some of the slides I just posted in my tab, probably my biggest point of feedback was a lot of you guys were saying like, this is great. Like, I see how you get into these trades, but then what? So we're planning entries, but that's not the full thing. We also got to plan exits because if we don't have a stop loss, now we're hoping. If we don't have a target, we can get greedy. If we don't have a plan, then it just comes down to like straight emotional decisions. So I'll just to summarize that little intro, I mean, as a swing trader or even a trader in general, like our edge is patience, structure, and just letting our trades play out. So we don't need many trades. We just need high quality, well planned ones. Like less trades and better plans is just gonna equal like more consistency.
Absolutely. One of the most, and I caught like the last half of that. I couldn't figure out my freaking mic, but thank you, Shark. And yeah, it was awesome that you shared that you had a checklist too. And what you said earlier was something funny enough. I said the same thing where, you said that anybody should be able to recite, their strategy or the reason for being in a trade. And I said the same thing about all the analysts. I said, I guarantee or basically guarantee that every single analyst that you talk to in here could recite their strategy to you or what they look for in, a couple sentences or a paragraph. And it's great that you said the same thing without even knowing that we talked about that because I think it just illustrates how significant it is to be able to do that, right? It's something simple, but so important.
Yeah, no, I mean 100%. And just like before a trade, I don't know if you guys need to like write this down or everything, but just those 6 questions. If you can't answer all six, you're not entering. What's my setup? Where am I entering? Where am I saying I'm wrong? Where do I get paid? How much am I risking? And then how will I manage it? That sixth one's just like the trade management rules that
Oh,
when I was starting out, that really helped me is I like to know what I'm doing when things maybe didn't go my way. That way I'm not there's no point in the trade where it comes down to emotions,
mm-hmm.
like I saw our edge it's not just a setup, it's the discipline to follow that plan when it matters the most. Because when that money's on the line, emotions really do take control and that's normal. That's not a flaw in anyone's thinking, that's just human nature. Like we worked hard for this and we're working hard even right now trying to learn more and get more. It becomes serious. But I mean, going in with a plan and a setup and like a clear structure, it takes all the emotions and all the really the hardest parts of trading just go out the window. It becomes a lot easier.
Mm-hmm. Absolutely. Yeah, you said it better than I could have. That's for sure. That was beautiful.
Okay, so I think when I do share what I'm looking for in a trade, just to give like any of those examples, the ones that I posted on my tab, it's really clear with those zones, and I know I've harped on it, but I say if I'm gonna add one of those things, like I kind of created my own strategy, I'm adding right before the invalidation zone. That way, in my mind, I'm never really doubling down. It's just giving myself that cheapest entry before I cut. Like little things like that. I mean, I came up with that years ago, and it's part of my checklist of where I'm gonna have that zone. And people always DM me and say like, "How are you so patient?" or "How do you stay so level-headed when these trades are, especially in this market, it's pretty choppy. You're gonna have these days like today's. You're gonna have days like we seen last Thursday and Friday where no moves are really holding. And if I'm gonna put a trade out there and say it's gonna be a long leash, we're gonna see some volatility. It's because that was part of my plan initially. Like that JD trade where I said I went in light, knowing I expect it to end higher, but it's gonna see like some rocky waves in between. Obviously, that's gonna be a suspect one. I mean, looking at that down so much money, but that was part of my thesis before I entered. Never in a million years would I be able to hold on to that swing, not knowing that I said I'm gonna have a long leash on it. So that's one example of having that clear structure before and like having the discipline to follow it. it allows us to walk away profitable.
Absolutely. Yeah, and I'm sure people recognize it, but you definitely tend to have some of the most disciplined management of trades of anybody in here, I think. It's crazy some of the things I've seen Shark do. And I don't want to say this is what everybody should do because I think just to be super clear, Shark's got, plenty of experience and reason to be able to do things like this. But sometimes I'd be in one of his alerts and the thing we enter it, the next day it's up 60, 70%. And I'm like, bro, he's not alerting a sell or anything. Like, I sell. And then he shows up, maybe at close or a few hours later. He was sleeping the whole time. He didn't care. And wakes up and is like, okay, yep, we'll trim some here. And it's like he just waited for when it was time for him to sell. And the same thing goes for your average downs. I mean, I'll never forget, I think it was Penn maybe or DraftKings when that trade went. I mean, again, I don't want to advertise this because I don't think this is good for everybody to do it. Totally time and place, right? But I mean, this trade that Shark was in went down 80% probably, and he hit an average down, and the thing was up 500% with the average right after the average too. And that's just the nature of how he trades, and he follows his plan and it works. And it's that sort of stuff seems like magic to me, at least when he was doing that. I was like, dude, I can't believe this.
100%. Things like that. I mean, we can't see that without seeing the um other side of it. Like when you first start trading and those go against you, you kind of learn, oh, these zones, whether it's the next kind of thing I'm hoping to put out on my tab and all that is the volume nodes I've kind of been using recently. So like
Mhm.
obviously I don't want to get too deep into it now, but we have like a volume node that correlates with our demand zone and it's bounced there historically. It's just such a thing where you see it repetitively, you're like, okay, here, if we get here, now I take my average, and then obviously more than likely 85% of the time it's gonna play out the way you want it to because that's just history. So it happens the next day, and it does kind of look like one of those things where it's like, oh, how did you know? It's really just repetition and seeing these things over and over again, and having the discipline to follow through with what you said that I am gonna play it out just like I drew it up.
Where did you hit JD? Like here? I don't even know.
Let's see, we entered it on February 26th. So I'm taking it really light with a long leash just to hold till like expiration.
So right
And
around here, right on top of the shelf too, somewhere around here. And
yeah,
looked awful midweek the next week, and then looked great by the close, and then
yeah.
absolutely ripped.
It's and that's one of those where it really like I said, it's one of those where yes, you could wait and see. Sure, I'll kind of against my own rules, maybe like see the reaction rather than getting to our zone. But we get there. I entered it knowing that it might have this one we could chop. It fell beneath it. A lot of times there is going to be like an invalidation zone, but with the current market and the type of ticker JD is, it's one of those in my head where I was like, it's gonna go. It's just a matter of if and when in the next 2 weeks. So I'm gonna take a light position and we'll see. And I mean, I paid well, so I'm really grateful about that one.
That's crazy.
But yeah, like perfect for this lecture. I mean, trade plan, long leash, is what we planned, and that's what we did. So
Yeah, and next week's lecture is all about swing trading in specific. So I think if you're free, I don't know if you are free, um, that would be a really fun time for you to dive in a little bit deeper into how you operate and how you pick trades and that sort of thing.
yeah, no, that'd be great. I mean, I don't plan to go on any more flights because TSA right now is
I
not.
know, bro. I was impressed that you actually even got on a plane. Actually, what I've been seeing, it doesn't look very friendly right now. So glad you made it back.
The worst part of that is it wasn't even in the airport. We got on the plane and then they said it. Then we landed and they said it again. I was like, all right.
Yeah, that sucks, bro. But you're home now?
Yeah, yeah.
Nice, nice, cool.
And I know I'm late, but I'll leave my DMs open for any extra things. 'Cause I know you're running over an hour here.
No, no, I appreciate the time and I appreciate you making the effort to be here. And obviously you got a lot of other things going on. So everybody hopefully will show you a little bit of extra love for making the time. And yeah, I mean, I really appreciate you being here. And I said it, I think, when you weren't here, but dude, I mean, I've learned so much for you on from this specific topic. I mean, I wish I still had my old notes from you when we would have those calls because I don't know what happened to them. But anyway, I mean, some of those are gold, dude. Some of those notes, and I'm pissed I lost them. But anyway,
I mean, the good thing is, and hopefully, there's never a point where we're not in communication.
that's true. We go in waves.
Shit.
Cool. Okay. Well, I think like Shark mentioned, his DMs are open. Obviously, mine are too. So if you guys have any follow-up questions, I would say direct them that way, and we'll let Shark get on with his evening. But with that, everybody, that's gonna do it for tonight. So this was lecture 10, our trade planning lecture. Like I mentioned, next week we'll be swing trading. So hopefully we can, get Shark, maybe Nando in here, maybe River as well, and have a crazy one next week. But no promises. We'll see. Thank you, Shark. You're the GOAT.
Yeah, of course, man. See us.
Peace, brother. See ya. Thank you, guys. Thanks for your time as always.